Right now, we're diving into one of the most powerful tools for traders and investors, price, candlesticks in particular. If you've ever felt confused trying to predict the next big move in the markets, this video is going to change the way you see price action forever. Throughout this video, I'll break down the anatomy of bullish and bearish candlesticks, a few key reversal candlestick patterns, and I will briefly explain how candlesticks can be used to identify support and resistance. By the end of this video, you'll have the insight and confidence to read candlesticks at a glance, have improved timing on your trade entries, and also place stops in more technically sound places. Get comfortable, pay attention, let's lock in and get started. Straight into it then, we're looking at a bullish candlestick. We have a bullish body. The bullish body is all of this green section is the bullish body. Because it's a bullish candlestick, we have the open, which is at the lower end of the body down here. And we have the price close, which is at the high of the body up here. We have the upper black line, which is called the upper wick, which is there. And we have the lower wick, which is this line down here. That's the lower wick. So that's the basic anatomy of a bullish candlestick. Now we're looking at a bearish candlestick. So for a bearish candlestick, I'll change the color. We have the bearish body, which is all of the red section, which is the bearish body. Because this is a bearish candle, that means that price closed lower. So the open is at the top this time, which we have up here. And then we have price close, which is at the bottom of the body down here. We have the lower wick, which is down this part here. That's the lower wick. And then the upper wick is on the high, which is there. So now we're going to get into the more fun part, which is the key reversal candlestick patterns. So now we're looking at a bullish engulfing pattern. And the easiest way to explain the pattern is just looking at bodies. So for it to be a bullish engulfing pattern, we're looking at the bullish body. So with the bullish body, you can see that the body is larger than the previous bearish candlestick. This is why this is a bullish engulfing candlestick pattern. It means that the green candlestick or the bullish candlestick can fully eat or engulf the previous red candlestick. So don't worry about the upper wicks or the lower wicks. For bullish engulfing patterns, we're simply just looking at the body. So if I take that off, you can see that the green body, which is the bullish candlestick, is larger and fully engulfs or eats the previous red candlestick or bearish candlestick. So for a bearish engulfing candlestick pattern, we have a bearish candle, the candle body, and the bearish candlestick body needs to be larger than the previous bullish candlestick body. Again, don't worry about the candlestick wicks. For it to be a bearish engulfing pattern, you're simply looking at the body. You're looking at the bearish body, and as long as the bearish body can fully engulf the previous bullish body, then we have a bearish engulfing pattern. So a bearish engulfing pattern is a key reversal candlestick pattern which can help you identify when markets are likely to turn and decline, and the opposite for a bullish engulfing pattern. This is a hammer or a pin bar. We have a candlestick body, which we have here in green, and the long wick. With the long wick, the wick needs to be at least twice the length of the body, which you can see it's clearly twice the length now, and that is called a hammer or a pin bar. The inverted hammer or inverted pin bar. It's basically exactly the same as the previous hammer, but it's upside down. So whereas previously the hammer was shaped like this time it's the opposite way around, which is why it's called inverted hammer or inverted pin bar. For this to be classed as a inverted hammer or inverted pin bar, a body which we have here in red and a upper wick, which is the long wick there, and the upper wick needs to be at least twice the length of the body. Here you can see it's clearly over twice the length, but that is a inverted hammer. These candlestick patterns are key because when you use them in the right places, they help you identify key market turning points, as well as helping you to identify support and resistance levels. So now when we look at the chart, you can see that we have the candlesticks. Hopefully it definitely makes more sense to you now. You can see that when you have a bearish candle, you know that the open started off up here and the close started off ended down here. When you have a bearish candle, it means price is going down. Whereas when you have a bullish candle, it means price opened at this low of the body here and closed at the upper end of the body up here. So bullish is when price goes up, bearish is when price goes down. Here we have the long wick, which we know what that is now. The upper one is called the upper wick, upper candle wick. And on this one here, we have a lower candle wick here. So now when we look at the charts, we can scroll through and we can identify that we have key reversal candlestick patterns here, one being a bullish engulfing pattern. So if we look at these two candlesticks here, I've highlighted them in yellow. If we're looking at these two candlesticks, this green candlestick here and this red candlestick here, you can see that the green candlestick body is fully engulfing the previous bearish candlestick body. That's why we have a bullish engulfing candlestick pattern. When we're looking at these two candlesticks, we're looking at this red candlestick here and this green candlestick here. Looking at these two, this is now a bearish engulfing candlestick pattern. Again, don't worry about the candle wicks. We're just looking at the bodies. We can see that this bearish body fully engulfs the previous bullish body. So here we have a bearish engulfing candlestick pattern. The one that I've highlighted now is a inverted hammer or inverted pin bar. Here we can see we have a small body followed by a very long wick, a long upper wick. That's why this one here is a inverted hammer or an inverted pin bar. And next to it right here, looking at this one, we have a hammer or a pin bar. Don't worry about the color of the bodies on pin bars or hammers or pin bars. Don't be concerned about the color of the body, whether it be bullish or bearish or red or green. It doesn't matter. Here we're looking at the pin bar, and the reason why it's defined as a pin bar is because here we have a body, which is the little red part, followed by a long wick, and the long wick is at least twice the length of the body. So that's a pin bar. Important point to consider: where you find these key reversal candlestick patterns makes a big difference. So take notice of them at highs and at lows, as well as at support and resistance levels. Don't dilly-dally in the middle. I'm pretty sure now you're already seeing candlesticks and price action in a whole new light, just like so many other traders have told me. Even a little insight into candlesticks can be a game changer for your trading strategy. If you'd like someone to guide you through the process, I'm here to help. Whether you need a mentor to answer your questions, walk you through chart analysis, or boost your trading strategy, don't hesitate to reach out. If you want more resources, head over to my website and join my free Discord. Plenty of content there. Now we've covered the foundations. In the next video, I'll be exploring how candlesticks can be used to pinpoint one of the biggest drivers of price in any market: support and resistance, buyers and sellers. Stay tuned, trade smart, and I'll see you on the next video.